Let me start with a simple picture. Because a long time ago, miners carried a small bird, a canary, down into the coal mines. The bird would feel danger in the air before the miners could see it. And if the canary got weak, the miners knew they had to act. In today's financial system, we have something very similar. Silver, because it acts like the canary in the coal mine. Gold acts like the oxygen tank. One warns you early, the other keeps you safe. Today, I'm going to show you why both matter and why they tend to show up at the exact moments when the system begins to change. This chart shows you three things: the amount of money in the system, the price of things, and what your money can actually buy over time. Money supply goes up, prices go up, and purchasing power goes down. And that means that your dollars buy less and less over time. And sometimes that process doesn't move slowly, it speeds up. This is what happens when the process breaks. In Germany, after World War I, money was printed faster and faster. I don't know, does it seem familiar to you? Prices exploded, and the value of that money, the purchasing power value of that money collapsed. People didn't lose it slowly. They lost everything, and they did it really quickly. This is not just history, it's a pattern. Over 4,800 currencies have followed the same exact pattern. So the question becomes, how do you see it coming? Well, sometimes the system breaks with inflation. First, it usually breaks with deflation, right? There's only one way to fight deflation. That would be markets going down, and that's with inflation. But in both cases, stress shows up in the system. The economy moves through cycles: growth, slowdown, inflation, deflation. And different assets behave very differently in each phase. So now let's introduce the two signals that we really actually care about. Because gold has been in a positive long-term upward trend for really since 1913. And it moves over time, but generally in a very steady direction. Silver also is trending upward, we can see that, but it moves much more sharply, much more volatilely. This difference is not random. It tells us something important. Because gold tends to move more consistently, it holds value over long periods. It is the primary currency metal. It doesn't react first, but it endures. Silver behaves differently. It moves more tied to the cycles, it's more volatile, and it moves faster. It spikes, it drops, it reacts. This is the key idea. So I want you to think of the financial system like a coal mine. Silver is the canary. It reacts first. It moves early. It tells you something in the system is changing. It is a pattern shift. But gold, it's different. Gold is the anchor. It doesn't rush and it doesn't panic. It holds value as everything else adjusts. It's not gold going up. It's the value of the fiat money, the government money going down. So when conditions begin to shift, silver gives you the first signal. Gold gives you the stability. And when we can see this most clearly, it's in a real crisis. Weimar gold versus silver, because all the time you guys are asking me about the silver-gold ratio. But in the Weimar hyperinflation, silver moved first. It reacted early as the system began to break. And we saw that gold to silver ratio narrow like you can see on this chart. But gold moved further and held value as the crisis fully unfolded. So for a while, as that gold to silver ratio became more narrow, but once the hyperinflation really kicked into gear, then it's the gold that holds the value. And this is the pattern. Silver signals, gold protects. And silver does indeed also protect your purchasing power for food and smaller items. That's why, for me, it's my barterable position. But, at first, that gold-silver ratio declines, and then it climbs because silver is the fuse. And again, it moves first, like the canary in the coal mine. But gold anchors the world. It anchors all assets. And you might be surprised by the fact that there was more time than not when every asset was judged against how much gold you needed to buy it, not dollars. So frankly, over long periods, gold consistently outperforms, frankly, all other major assets. Not all at once, but over time. Anything can happen in a short time. And that's what an anchor actually does. But there's another reason gold plays this role. Gold is much more widely traded, and that gives it more liquidity in certain markets. Because remember, there are 33 distinct users of physical gold in the global system, and there are 36, which makes it more volatile, physical users of the silver. But gold is more widely held. Gold is more widely trusted. And that gives it depth and stability, like it's done for thousands and thousands of years. And during times of stress, gold behaves differently than stocks. It balances the risk. It diversifies the portfolio so that when the systems are under pressure, well, you can see what happens. And this isn't just theory. Across many currencies, across every single fiat currency, government, debt-based currency, gold has been rising because the purchasing power of that currency is losing value, sometimes faster, sometimes slower. And your evidence that you need to pay attention to is inflation. Have things cost you less to buy? Heck no. So this tells us something very simple. It's not just one country's problem. This is a system-wide global signal. So let's go back to that mine. The canary doesn't cause the danger, it reveals it. Silver doesn't create instability, it reacts to it. But gold does not panic. It absorbs the shift and it holds its value. At Zang International, we don't try to predict every moment and tell you exactly when these things are going to move because we are not traders. We look at patterns, and history makes it really clear. Systems change. Money, fiat money, government debt-based money, by design, loses value over time. And in those moments, gold and silver play a completely different but connected role. And it helps you maintain your current standard of living in those day-to-day purchases, like strawberries or gasoline or the things that you need from your neighbors. But gold helps you navigate what happens next. Because while they want this loss to happen slowly so that you don't notice it, at the end of the cycle, it happens very, very rapidly. You won't have the time or opportunity to move then. This is why it is so important to get your sound money strategy in place now and executed. Properly diversify any of those things that you need to or want to hold inside of the intangible fiat money system. Make sure you have these physical metals outside of the system as well to protect your purchasing power. So call us. We actually do have a strategy, how you enter, what you position into based on your goals, and when you're going to exit. So it's true, you should always have a nice foundation of sound money, but what will vary will depend on where we are in the fiat money life cycle and what is the next most likely outcome. So call us. We will help you get positioned today because our goal is to build this community locally so that you can ensure surety in food, water, energy, security, barterability, wealth preservation, community, and shelter. Arguably, community is the most important piece, and we have to do that on a global basis because we have to demand redeemable gold back in the global monetary system again. It is time for the public to take its power back. It is not okay with me that they have robbed us and the future that they have in mind for our children, where essentially we're back in feudal times, where you've got a couple people that own everything and the masses that have to pay rent on everything. Don't let that happen. All we have to do is get 3% of the global population to convert their garbage fiat that's being inflated away into sound money, gold, and silver, and then demand redeemable gold in the system today. I know we can do this. If we come together in global community, we got a really strong shot at it. So I test you. Look in the mirror. If not me, who? And if not now, when? I say it's you, it's us together, and the time is now. We can do this together. So until next we meet, wherever you are in the world, please be safe out there. Bye-bye.